Ren, other news that's making headlines that we wanted to devote a segment to during from last week was the re-engagement of negative gearing from the Australian Labor Party, bringing it to the fore, potentially bringing it to the fore again as an election issue.
Yes.
They brought it in 2019, I think, lost the election because of it.
Well, yeah, they lost the election.
Yeah.
And this was one of the big policy agendas that Bill Shorten had at the time.
Yes, yeah. The Australian Labor Party are considering going to next year's federal election with a policy around restricting negative gearing.
Yeah. Now, for people unfamiliar, negative gearing is when you are spending more on an investment property than you are making in rental income, and the difference between what you lose and what you make, you can claim as a tax deduction. Now, in the 2021-2022 financial year, 1.1 million Australians had negatively geared properties. Interestingly, our Prime Minister, Anthony Albanese, has a property that, at least from one sensationalized article I read on REA's website yesterday, is negatively geared. And I'm sure he is not the only politician that has a negatively geared property. Now, negative gearing has a long history in Australia. It was introduced in the 1930s as a way to address housing shortages. The idea was it would incentivize Australians to invest in property and boost the number of rental houses available. There was 1 year in the 1980s where we turned off negative gearing, and then we very quickly put it back on as a policy.
Did not know that.
Yeah, so I think that should inform some of the conversations today.
What, and was it quickly turned back on from an economic reason or policy, like political backlash?
So I don't think ending negative gearing is going to have the effect that people hope it will. Yeah. And my reason is it's a sequencing mechanism. So 1.1 million Australians have a negatively geared home. Many have multiple negative geared homes. When you take off the tax benefit of negative gearing, as an investor, what's the first thing you're going to do? So you can no longer negatively gear your investment property.
Jack your rents.
Jack your rents. And I think that's why they took it off in the 80s. And I think that's why we should be careful about how we talk about this policy today. Because in time, it would likely bring house prices down because investors wouldn't be willing to overpay. Like, they wouldn't be willing to negatively gear their property and lose money on it. So in theory, that takes some of the excesses out of the housing market. In theory, I know that is a contestable claim, but in theory, that's why people are saying we should do it. But that is the second order effect. The first order effect is that rents get jacked, and people try and hang on to their properties and positively gear them.
But is that not also in line with dissuasion of new investors coming in, like?
Yeah. Well, it would.
And so I think, So, but that would coincide. So it's not like existing supply. It's not like you're right. It's not like existing investors will sell immediately.
Yeah.
But the incoming demand from investors should also pull back a bit.
From new investors.
Investors. Yeah. So I think that's some of the counter.
The thing is, like, there would still be new investors. It's just that they would only want to buy properties that are positively geared.
Yeah, and which we know is.
But you would see that would just like push rents up, because it's like the extent that which we can push rents up and keep properties positively geared or make properties positively geared. Like, that's what we're willing to spend, if that makes sense.
I know what you're saying. Yeah. But I think we're so, like, imagine how much you would have to charge in rent for a positively geared house at the moment.
I know. Well, like, think about it in Sydney. It's like, yeah.
It's nuts.
So like, it is a policy that distorts the market, and we should all wish that it wasn't that in the 80s they stuck fat and got rid of it and allowed the market to normalize. But unfortunately, that's not the situation we're in. So part of the reason why people think we should remove it is not only that it inflates house prices, but it also costs the government a lot of money. 2.7 billion in lost tax revenue in the 2020-2021 financial year. But look, this segment isn't just about us, Bryce. We went to the Equity Mates community on our Instagram. We put a poll up, and we said,
if you're not following our Instagram, get on it.
Get on it. We said we put a post up and we asked, should the government scrap negative gearing? We put 4 choices to the audience. Yes, scrap it completely. Yes, but grandfather it in for existing investments, so don't allow it for new investments. Yes, but limit it to a certain number of houses, and no, keep negative gearing as it is. 4 options. Have you looked at the results?
No.
Okay, so first of all, before you try and guess what the most common one was, what would you do?
Oh, what would I do? What would I do? I would grandfather it.
So you give existing investors a benefit at the cost of new investors.
Yes. I think that's the fairest way to do it.
Yeah. So that was the least popular option.
Really?
10%.
What
And
would you do?
I get why that's the least popular option, because it would be the least disruptive option, but it would just add to that sense of injustice and unfairness. Oh, existing property investors who have already reaped all these benefits get another benefit and have an advantage over.
Yeah.
But I get
that.
I get the policy arguments why you would do it. It would be the least disruptive to the market.
Yeah.
Because then existing rentals that are negatively geared, you wouldn't need to jack the rent up, but then you could allow the market to slowly normalize as those houses sell over time.
Exactly.
Do you want to guess what the most popular option was?
Just sack it.
No, the most popular option was keep negative gearing as it is.
What?
34%. Yeah. Second most
the Equity Mates community are all property investors.
well, at least a third of them.
Keep it as is.
Yeah. Second most popular was yes, but limit to a certain number of houses. I quite like that as a phasing mechanism. It's like
what? Like 4 beddies versus 3 beddies.
No. It's like everyone can negatively gear 2 houses, and then in 5 years you make it 1 house, and so you allow the market to normalize over time that way.
Oh, but that's just still rewarding people that can afford 2 houses.
Yeah, of course. Yeah. So that was the second most popular option, 32%. Scrapping it completely, 23% was the third most popular option.
Wow.
So opinions were divided.
That's why it's a hot election issue.
Yeah. But I want to leave this segment with 2 key call-outs, because I think negative gearing is important to talk about, but I don't think it's the most important to talk about. I don't think it's had the biggest effect on house prices in Australia. The third rail of house prices in Australia, the one that no one is willing to talk about, but it has had the biggest impact, the capital gains exemption. I think there's charts where you see where that policy was put in place in the early 2000s, and how it was like a real inflection point for house prices. And especially you can see the chart where the median income to median house price ratio was pretty steady, and then it has a sharp inflection up in the 2000s, and that was a big part of it. It became much more of an asset to speculate on because of the tax benefits, and people could afford to over leverage themselves and pay more. And so that's one that you could think about. Is there a way we phase that back in and you allow the capital gains benefit to increase over time?
Would you say the same for stocks then?
No, because the capital gains benefit is better for housing than stocks. You get a 50% discount if you held for more than a year for stocks.
Yeah.
But for housing, your primary place of residence is just capital gains tax free.
Yes, true.
Yeah,
Sorry, yes, completely tax free.
So I would say, you could you say if you hold it for
flip it. Give us stocks, guys. Some
you could see a world where you say 10 plus years you get that capital gains exemption. So it's not completely off, but that increases over time. But I don't think that would change the situation in the short term. What we want is to change the situation now. And I reckon, and I've said this before on the show, but I reckon one thing that we could really look at, which would be really hard for pensioners, but would make an impact, is change the pension asset test. Because right now we have a policy set up in Australia where your primary place of residence isn't factored into your asset test for the pension. And so you can park you're incentivized to park as much wealth into your house as possible and buy as much house as possible, and then get the full pension. And so you have people sitting on a lot more house than they need, and there's no incentive to downsize, because as soon as you sell that, realize the gain, and then have heaps of assets, then you lose your pension, or a large chunk of your pension. So I think that's one where it's okay, well, that could probably have an immediate effect. You lose it, you'd 100% lose the election though. You wouldn't win.
I don't think that would have much more effect. You're just gonna move people from expensive houses to smaller houses. Then people are gonna have to try and buy really expensive houses.
Yeah, but if you think of like
that's not where the yeah, I don't know how much effect that would have.
That's fair. Trying to bring solutions to the table.
Yeah, look.
I think the challenge is like negative gearing, the capital gains exemption, the pension assets test. You're all dealing on the fringes of what is like a fundamentally unsolvable issue at the moment.
That's the crux.
Because it's like everyone's like, we got to build our way out of it. The government's big housing policy is 1.2 million houses in the next 5 years. They've got this housing future fund to try and do it. The challenge is we already, of all OECD nations, we build the second most houses per capita. Like we build a lot and it's going to be hard to build more because we've got massive building bankruptcies. Like a lot of builders can't build more or are going out of business. And so then the conversation turns to population growth and immigration. And that's a difficult conversation in itself, but it's like structurally the way we're set up, changing the tax system isn't going to get the result that we want.
No.
In the short term.
No, between a rock and a hard place.
But the question for the Labor Party is, have people's views on housing changed enough in 6 years that what was a losing election issue in 2019 becomes a winning election issue in 2025? And based on the results of our Instagram poll,
no.
The answer is no.
Well, I think maybe with that policy view with targeting negative gearing, but I would imagine if there were some other things that they came to the table with. But yeah, you're right. It's a tough one. Groundswell will definitely keep building until something will happen. But maybe, or it's just a situation where the groundswell is in people that don't own houses, but enough people continue to get into houses early enough in their lives. It might not be in their 20s anymore, but it might be in people's like 30s and 40s. And then instantly they switch. Yeah.
And maybe that'll be enough.
That's it.
And this Ponzi scheme will go on forever.
Anyway, we'll see whether they can actually bring it to the election or not, because they haven't actually announced anything yet.
No.
So let's join us on the Facebook. Join us in our Facebook community, yes. But also, if you're not following us on Instagram, as you've heard, we're certainly having the conversations there and love getting your input as well. So Equity Mates is the tag. Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.